हेलो गाइस, गुड आफ्टरनून, गुड इवनिंग, गुड मॉर्निंग। जब भी जो भी जैसे भी लेक्चर दिख रहा है, कैसे हैं आप सब लोग? होप सो ऑल आर गुड। सॉरी फॉर द डिले, देयर वाज सम कनेक्शन इश्यूज earlier, but now we are all back. Okay, so now today we are going to start a new chapter, which is altogether a very important part of your accounting journey. Okay, by this chapter, you will be a good professional, or I would say a good accountant, what the company expects from you. So, we are now on the finale that is called preparation of your final accounts. Just to give you some relief, the final accounts you are already being prepared in the chapter number one. We have already prepared the final accounts in the chapter number one. You know what is the trial balance, you know what is the balance sheet, you know what is the profit and loss account, you know the trading account. So basically, you know the concepts. But what we are doing it, we are putting together all the concepts which we have learned till now, and we are going to do some more examples on it. So that is the objective behind this chapter. So before starting actually the theory of the chapter, I would like to go to the one of the illustration of this chapter. Okay, we are going to do one of the illustration first, and then you will understand what exactly I was talking about. So everyone in your books, go to the illustration number one. One second. So directly we will be starting with the illustration, no information, because you already know many adjustments out of this. So this is your page number 213 of your notes. And you can see there is an illustration number one, which is asking you to prepare the trading account. That is requiring you to prepare the trading account. What information they have given? Let's have a look on your screens. Okay. Preparation of trading account following are the ledger balances in Messrs P. Sen as on 31st of March 2020. So they have given some ledger balances as on 31st of March 2020. Now what we have to do? We have to prepare a trading account based on this information. What they have given is the stock. This can be said as opening stock. Why opening stock? Because it is of 1st of April 2019. Okay, that is the first thing. Then we have the purchase account, carriage inwards, wages, freight, sales, return inward, return outward, royalty on production, as well as gas and fuel. We know what are the your trading account and what are your P&L accounts. So all the things which are relating to trading account that we need to consider, P&L items can be ignored in this question. Now they have given additional information about the closing stock. This is the closing stock. So closing stock has the market price of 24,000 and a cost price of 20,000. So obviously in our accounts, we do not value at the market price, we value at the cost price. So we need to consider 20,000 as the closing stock. Stock value 10,000 were destroyed by fire and insurance company admitted the claim of 6,000. Okay, so 10,000 is out from your stock and 6,000 is the claim you have received from the insurance company. So claim from insurance company is a P&L item, but stock is a trading item. So you need to consider the stock over here. Then goods purchased for 6,000 on 29th of March we have purchased, but it is still in transit. That means it is not reached us. It is not recorded in the books. But technically, we have purchased on 29th of March itself only. So we will show it is in our trading account as goods in transit, 6,000. Then goods taken from the for the proprietor for his own use. That is goods taken out, 3,000. Then we have outstanding wages of 4,000. There is outstanding wages and the freight which is mentioned 8,000 over here, out of this 1,000 was paid in advance. So what we need to do, we need to prepare the trading account. I will give you 5 minutes. Try to prepare the trading account by yourself. and then we will discuss what is the gross profit and what is the gross loss. Obviously, this is a first time exercise, but I want you to give a try first and then we can move ahead. So if anybody wants the format of the trading account, so it is also given on one of the page. Let me check. So if you see your page number 215, there is a format of trading account which you can use for this question. Okay, just try this question. You have 5 minutes to solve this. This is the format. Take a screenshot if you want. And then you have to just fit the data, whatever is given in your illustration. One, apply the accrual principles, apply the basic principles, which I have already taught you in the chapter number 1, and then you can solve this question. Try it. Okay, guys. I think you all have tried some of the part over here. If not, let me know. Can we start together? Let's do this question. So what they have asked us, they have asked us to prepare the trading account for the proprietor. So in the trading account, we will enter all the data which is given one by one. And then we are going to calculate the gross profit as well as the gross loss, whatever the case may be. Okay. So we have our particulars, we have amount, we have again particulars and amount, your debit side and your credit side. So our format is ready. Let's start with your question. So first thing which they have given is the stock. So I have the opening stock over here that should be on the debit side, and then we have the closing stock which is over here. So closing stock should be on your credit side. So now if you go to your trading account to opening stock, what is the amount which they have given? It is 10,000. By closing stock is rupees cost price that will be considered rupees 20,000. The thing we are doing, we are just posting the accounts from the ledger balances to our trading account. Okay. Then what we have purchases of 1,60,000. We have purchases of how much? 1,60,000. So if you refer to the answer, you can just tally it from your answers. Okay. But if you have not done it, just do it with me. So purchases account will be debited for 1,60,000, right? Then we have next adjustment. We have some return inward and return outward also. So return outward is nothing but your purchase return. So what you can do here, you can show your purchases amount in the inner column like this, 1,60,000, and you can deduct the purchase return that is of 10,000 rupees. That will be deducted from here. So the net amount appearing in the outer column would be 1,50,000. Okay, so whatever I have considered, I am just ticking it off. This is done. This is done. Purchase is done. Return outward is done. Next is carriage inwards, that is of 10,000. To carriage inwards, it is 10,000. Carriage outward is a part of P&L, but carriage inward is a part of your, again, trading account. Then wages. Wages means again trading account 30,000. That is directly related to your goods. And we have some outstanding wages. So that is why I am writing 30,000 in the inner column. Let's do the adjustment also. Or what we can do, we can do the adjustment at a later stage, at the final stage. Then we have freight. So freight inwards, nothing is mentioned and we are required to prepare the trading account. So I am assuming it is a freight inward. It is of 8,000. So this would come again in the inner column because again there is an adjustment for freight. 8,000 in the inner column. Then we have sales of 3 lakhs. Sales is credited by sales account. Return outward. So we have a sales return inward, which is a sales return of 16,000. So what we can do, we can do the same thing which we did for the purchase return. So 3 lakhs minus sales return of how much it was? 16,000. So net sales, we can write it 2 lakh 84,000 in the outer column. Then we have to mention the royalty on production. This is also an expense. It is of how much? 6,000 rupees. Royalty is 6,000 rupees. Then we have gas and fuel of 2,000. This is also a direct expenses. Gas and fuel of 2,000. So all the GL entries are posted now. Everything is done. Come on, everyone, just reply me. Are you all with me? Any doubt till now? Then I can only move ahead. Just give your comments in the chat box. Are you all with me? Okay, good. Good to know. Now, if I say first adjustment of closing stock is done, second, stock valued rupees 10,000 was destroyed by fire. The goods is destroyed by fire. So when I purchase the goods, it is coming on the debit side. When the goods is going out, should I mention it on the credit side? Yes or no? So this is goods which is lost. This is the goods which is lost by fire. So this is an expense. This is an expense, right? So stock value 10,000 was destroyed by fire. That means now we are our goods is reduced by 10,000. So obviously I will book the losses, but for booking the losses, I need to go to P&L account. For getting the stock out, what I can do? I can credit the trading account and debit the P&L with the 10,000. But we are not preparing the P&L account. So what we can do? We can only and only book the outgoing of your stock by goods lost by fire account. Okay. So this will be out. Goods will be out from your trading account, and will this loss will be gone to the P&L. However, they have also given one more thing, that we have received 6,000 from the this 6,000. We have received 6,000 from the insurance company. So this will be credited to the P&L account. So 10,000 in total will be debited. 6,000 will be credited. So I would say actual loss would be of 4,000, because I have lost the goods of 10,000, but I have received the cash for insurance claim for 6,000. So that is credited. Okay. Then the third, goods purchased for 6,000 on 29th of March is still lying in transit, but not at all recorded in the books. So we will record it into our books. So it will come on the debit side to goods in transit. That is 6,000. Whenever the goods is coming in, you need to debit. Whenever the goods are going out, you need to credit your trading account. Okay. Then goods taken by the proprietor for his own use, 3,000. So I would say buy drawings, 3,000. He has taken the goods, so drawing will be credited, or I would say we can debit its capital account also. So trading account would be credited and capital account will be debited. Then we have outstanding wages of 4,000. So currently what our ledger is showing, we have 30,000 of the wages which is due and paid. But right now 4,000 is outstanding. So this is an expense of the current year. So this will be added. So total wages expense is 34,000 on your debit side. Then we have freight was paid in advance of 1,000. So this 8,000 includes the 1,000 which is paid as advance. This does not belong to current year, but it will belong to the next year. So I have deducted it from the current year expenses, prepaid. Okay, so prepaid is deducted. So net 7,000 is written on that side. Nothing, everything is done. All the points are considered. Our question is completely given effect for the transactions which are given and the adjustments which are given. Only thing now you need to do is total both the sides. Okay, let's do the total for the debit side first. So it would be 10,000 plus 1,50,000 plus 10,000 again plus 34,000 plus 7,000 plus 6,000 plus 2,000 plus 6,000. So it is coming up to be 2,25,000. And on the credit side, it is 284 plus 10 plus 20 plus 3. It is coming 3,17,000. So the total would be 3,17,000. We are getting a balancing figure on the debit side. So this would be gross profit balancing figure 3,17,000 minus 2,25,000. This should come to your 92,000. That is your correct answer. That is how you will prepare your trading account. This we have already covered. If you have any doubt, you can just message me right now and then we can resolve it. Otherwise, we can move ahead for our discussion. So that was your illustration number 1 of your final accounts, right? Now, what we can do, we can practice one P&L account as well. On P&L account, we have the format over here. Okay, just look at this format. Whenever we have a gross profit in the trading account, so the gross profit is the cross entry which comes in the P&L credit side. And if we have a gross loss, then again cross entry, it will come on the debit side in your P&L. And then you will write all the expenses which have been incurred in the current year, all the expenses which can be incurred, all the indirect expenses, because direct expenses are gone in what? Indirect expenses, because the direct expenses are there in your trading account. In the same way, if you have a direct income, that is again your trading, which is relating to your goods. And here you have indirect income. Okay, this is the format which it is given right now. Okay, in your illustration number 1, there is one answer which is given. It is 98,000 over here, and our answer was, let me check, it was 92,000. So let us cross tally what the information is there, or what we have missed, or what they have missed. So sales is 284, closing stock is 20, goods destroyed is 10, to total coming 30. So 284, 20,000, goods lost by fire 10,000, and they have considered 6,000 over here, which is incorrect. The goods in transit, they have considered it on the credit side, right? We have considered it on the debit side. So that is the reason of the difference right now. What there is a different approach for goods in transit. Basically, that is the goods which we have purchased but not yet received. So what you can do, the treatment which we have done is this one. We have, if we have purchased the goods, what we do? We debit the goods. Will debit our account, trading account, right? And we will credit the vendor account. So that is the main reason of difference from here to here. Let's go to the format which they have given. So you can see they haven't mentioned anything about the goods in transit. But what you can do, you can just follow this format which we have done in our example. That is the main reason of difference which is coming over here. Rest all seems fine to me. Okay, the 3000 which is goods taken by the proprietor, they have deducted it on the debit side. So we have mentioned it on the credit side. Both treatment is fine. Rest all is same. There is no other change. Yeah. Okay. So that was the point of difference. Let us do a comprehensive question, another question on trading and P&L account both. Okay, where we have both the things in our question. Let us do that type of question right now. Okay, there is a question which is only of P&L, but it has a gross profit given of 1 lakh. So directly you can prepare a P&L account. Okay, just try illustration number 2 where you need to prepare a P&L account. Just try this question. How many minutes, beta? Have your 5 minutes approximately. 5 minutes, or yes, that would be enough for this question. Carriage inwards, beta, if it is not added, it should be added. That is a direct expense. Okay, so if you are preparing a trading account, carriage inwards would be considered over there. Okay, guys, should we start? So what they've given you information, let's read it out. You have a P&L account which needs to be prepared from the following particulars of Shri Tirlahankar for the year ended 31st of March 2021. We have given the gross profit, rent, salaries, commission is in bracket they have given credit. So what does that credit means? That is the income which we have received. Insurance 8,000, interest again credit, that is the income. Bad dates, that is the loss 2,000. Provision for bad dates opening they have given as 4,000. Sundry debtors 40,000, discount received 2,000, plant and machinery 80,000. So obviously debtors, plant and machinery are not part of your P&L items. Now what adjustments they have given, let's look at it. There are outstanding salaries of 4,000. So obviously if it is outstanding, this will be added. Rent is paid for 11 months. So that means 1 month rent is still due, that is outstanding. We will add it. Interest is due but not received, that is amount of 2,000. So this interest above mentioned is the which is received. We will add the 2,000 because it is due and it is not received that as per the accrual concept. Then we have prepaid insurance of 2,000. So insurance we have made in prepaid of 2,000. Right now in our P&L it is of 8,000. That is of current year and the next year. So we will deduct the amount of next year, which is 2,000, which is the prepaid amount. We need to depreciate the plant and machinery by 10% per annum. So plant and machinery, we had the value of 80,000, the 10% of it, that would be 8,000. Further, bad debts amounting to 2,000 and make a provision of 5,000, for 5% on sundry debtors. Now what we need to do, this is a special point that we will do right now. This is a special point. Okay. And at last, the commission received in advance amounted to rupees 2,000. There was some commission which was received in advance of 2,000. Actually, we received the commission of 12,000. So out of which 2,000 is advance, we will deduct that because it is not the income of the current year. So that was all the question which is given to you. Let's try to do it in our notes. So we have our profit and loss account for Mr. So and so for the year ended 31st of March 2021. So we have particulars, amount, particulars, and amount. So from the objective perspective, if you know the treatment, everything is fine. If you do not know the treatment, then there is a struggle. Okay. If I ask you to do this question on your copies, so one thing is helpful, not obviously from the objective perspective, one thing is helpful that whatever point has adjustment, just underline those things. For example, there is an adjustment in salaries. Okay, so where was salary? I will underline this so that whenever I book my P&L account, whenever I consider my P&L account, I will write this column, this amount in the outer column. Okay. So I will write it first on the inner column and then whatever the adjustment is there, I will do the adjustment and then finally I will write it on the outer column. Okay, so salaries had the adjustment, commission also had some adjustment, insurance had some adjustment, interest has adjustment, bad debts whole adjustment we need to do. So that is a separate topic altogether. Okay, bad debts is a full separate topic that we need to do. Then we have discount received, that is fine. And that's all. Okay, let's start doing it. First thing first, gross profit 1 lakh. So in my profit and loss account, by gross profit 1 lakh rupees. There is a 1 lakh of gross profit. Then we have next rent of 22,000. So there is adjustment in rent also. I will underline it. Rent of 22,000. So to rent, that is an expense. I will write it on the inner column. 22,000. Then we have salaries 10,000. Then we have a commission, which is a credit balance of 12,000. Salaries is done. Commission of 12,000 with adjustment. So by commission of how much? 12,000. Then we have insurance of 8,000. Then we have interest credit of 6,000. It is also underlined. So in inner column, by interest 6,000. Then we have bad debts that we will do a separate account for that. Okay. Then we have discount received of 2,000. So that is an income. By discount received, that is of 2,000. Now all the information is done except for the bad debts. Bad debts is kept for last. Let us do all the adjustments. First adjustment, outstanding salaries amounting to 4,000. So obviously this is outstanding. That means it is not paid. So I will add the outstanding salaries. That is of how much? 4,000. So your total salary would come out to be 14,000 in the outer column. Next, rent is paid for 11 months. So 1 month is due. So I will add the outstanding rent of 1 month. So 22,000 is paid for 11 months. So 1 month rent is 2,000 rupees. So that way I have calculated, and in outer column it would be 24,000 as the rent. Then we have interest due but not received. It is due but not received. It is 2,000. So plus in the interest, that is accrued interest. It is due but not received. It is 2,000. So this will come in the outer column as 8,000. Okay. Then we have prepaid insurance amounting to 2,000, which is paid in advance. So prepaid will be deducted. Prepaid insurance of 2,000. So net amount which will come out in the outer column would be 6,000 rupees. Next, depreciate plant and machinery by 10%. So plant and machinery was of 80,000. So the depreciation would be 10% of 80,000. That is 8,000 rupees. 8,000 rupees. Then bad debts we will do in last. Last is given commission received in advance amounting to 2,000. So commission advance commission which we have received. It does not belong to current year. It is received in advance. So I will subtract this. So this will be total 10,000 which we have done. Now let's go to the provision for bad debts. I'm going to show you one account which is provision for bad debt account. So provision for bad debt is an account where we keep the provision for every year that there could be possible customer which will not pay me the money, For example, I have total customer of 25,000. Out of that 25,000, from my experience, it says that only 22,000 rupees I will recover from it. 3,000 would be lost. 3,000 would be lost. So according to the accrual concept, if 3,000 would be lost, let us make a provision for it. That is called the provision for bad debt. That is called the provision for bad debt. So in our question, we have been given with the opening balance of bad debt as 4,000. Provision for bad debt is opening of 4,000. So this will be mentioned in your bad debt account, provision for bad debt account, as by balance brought down of 4,000 rupees. 4,000 rupees is the bad debt. Okay. Then you have actual bad debts of 2,000. You have a bad debt of 2,000. So obviously this provision is made for the bad debts. So I will charge this bad debts from the opening balances. I have made a provision of 4,000. Now 2,000 is actual bad debt which has been occurred. Now how much left? Provision 2,000. Technically it is left 2,000, but there is more information on it. Let's see. Further bad debts. There is further bad debts. That is apart from that 2,000 amounted to 2,000 more. So if I go here to further bad debts, it is of 2,000 extra. Okay. Now they are asking to make a provision for bad debt at the rate 5%. Still there is expectation that there should be a provision of 5% of your debtors. So what is the amount of debtors in the question? The sundry debtors amounting is rupees 40,000. So the balance carried down would be 5% of 40,000, that is 2,000. Just do the total, and whatever is the difference, we need to transfer it to the P&L account. So on the debit side, it is 6,000. On the credit side also, it should be 6,000. And this will be transferred to the P&L account as the balancing figure. As the balancing figure, 2,000 will be transferred to the P&L account. This is how you will do the accounting for bad debt. Let's see what approach the book has followed. Is it the same approach or it is something different? Okay, they have followed another approach, but just okay, they have done one thing correct. The sundry debtors were 40,000, out of which there were further bad debt of 2,000. So now the debtors are remaining as 30,000, 38,000, and 5% of 38,000 would be, as per our calculation, would be 1,900. That's the point we missed. So this would be 1,900. 5% of 38,000. Then the total will change. So this would be 5,900, 5,900, and the balancing figure would be 1,900 in my P&L account as to provision for bad debt 1,900. Okay, let's see the treatment which they have done for the bad debts. So they have booked 2,000 in the debit, further 2,000 again in the debit. They have created a provision over here of they have mentioned the provision, opening provision of 4,000, and they have deducted the closing provision of how much? 20, oh sorry, 1,900. So the net 2,100 is coming on the credit side. Now everybody, if you do the total, so we have 4,000 in the debit side and we have 2,100 on the credit side. So what is the net effect which is gone to the PNL? It is 1900 debited. It is 1900 debited. That's what we have done by this provision account. We have already done this calculation. We have just booked it by a single entry. Both the approach are correct until and unless your answer is correct. So you can follow any one of them. Okay. If you like the first approach, which I have told you right now, provision for bad debt account, so you can follow that. Otherwise, you can follow the approach which is given in the book. Now, what is left? Only the totals part is left. Do the total of your debit side, do the total of your credit side, whatever is the balance. If it is on the debit side, it will become the net profit. If it is on the credit side, it will become the net loss. Let's do it. Let's do the total. So that would be 24 plus 14 plus 6 plus 8 plus 1900. That is 53,900 on the debit side. And on the credit side, it is 1 lakh plus 10,000 plus 8,000 and plus 2,000. That is 1 lakh 20,000. Let's deduct 1 lakh 20,000 minus 53,900. So 66,100 is the net profit which is transferred to your capital account. That was all expected from this question. Okay, 66,100. It is matching with your books. Okay, now I will go to the first question again. So the meanwhile, when I gave you the second question to solve, I just analyzed that there is one mistake which we have occurred. The book answer is correct. Okay, the why they have mentioned only the presentation is wrong, which I mentioned that this should not be goods in transit. Instead, in your closing stock, you can add as goods in transit. Now, why we are doing this? Just understand the concept behind that. First, see what we are going to do. The closing stock would be increased by 6,000 and it will come as 26,000. Sir, why we are doing? Just look at the question. In the question, they have clearly mentioned goods purchased 6,000 on 29th of the March, but still lying in transit. And the line ahead, not at all recorded in the books. If it is not at all recorded in the books, so this is not considered in the purchases. Obviously, it is also not considered in the closing stock as well. So the closing stock which is mentioned above 20,000, it does not include the goods of 6,000. So that is the reason we are including this 6,000 on the credit side. So just to correct our answer here, our closing stock would be 20,000 plus goods in transit 6,000 and the total would come here as 26,000. And accordingly, your the total of the credit side and the debit side, this would change. This will increase by 3,000. Sorry, not 3,000, but 6,000. And your net profit will also increase by 6,000, which will match with your books. That is 98,000. Okay, this was the net profit. And they have missed to write the carriage inward amount. You can just write it over here. That is a misprint. You can write the 10,000 over here. That was the point. Okay. Okay, so as we started 15 minutes late, that is the reason I'm extending for 15 minutes. Just bear with me for today, and then I will take care of it from the next time. Okay. So we have done two questions of your final accounts. Your final accounts are the most important topic, as I mentioned. Now you need to try some of the questions which I will give you now. There is a new concept of P&L appropriation which I need to tell you, but that we will cover it up in the next class. For the homework, I'm just looking for a couple of questions which you can do. On your page number, on your page number 223, there are various items which is given. There is various items which is given that you need to mark that whether it will go to the trading account, and if to the trading account, whether on the debit side. Okay, this is very important for your 1 mark questions, the MCQs. So try to solve this. This is a very good question just to test your knowledge. Don't look at the solution before, just do it by yourself. Around there are 25 items. Okay, just do it by yourself and then check the answers from here. That you can do right now. I'm trying to find one more question. Yes, illustration number 8. Don't prepare the balance sheet, but prepare the trading and P&L account for this. You need to prepare the trading account. You need to prepare the profit and loss account. Just don't prepare anything after that. Only these things you can prepare. Illustration number 8. That is also your homework. If you want to prepare the balance sheet, just try it if you want, but I will take it up in the next class and then you can solve that. Okay, so that was all for today. Next, we will meet soon with your another concept of P&L appropriation. That is also one of the important concept which we need to study. Okay, and then we can move forward with our some of the last topics of this chapter, and then we can do some practice for these questions. Thank you all. Bye. Take care.